Well, hello again, Solis Wealth family. Greg Solis here with the update. First of all, on the family front, I hope you had a great time with your family over Thanksgiving. I know we certainly did. We had the kids all come in town for the first time. They were gone for literally 3 months. Nobody was there. And then they all flew into town. We had Jack, Nicole, Emily all there staying in the house, in the new house. So it was awesome. It was neat to roll out the red carpet for them. Normally we're telling them, hey, pick up your shoes, clean your dishes and all that. This time we're like, hey, let us serve you for a little while. So I really, really, truly enjoyed that. As empty nesters, having them all home was just fantastic. Looking forward to them all coming home for Christmas as well. So my very best to you through the holiday season as we go into 2024. I hope you have a great holiday season and a great 2024. So market wise, boy, what a great month November was. Of course, as you know, August, September, October were horrible. We had a good run up in 2023 after our brutal 2022. We had a good run up until late July. And then, of course, we had 3 months that were pretty bad. August, September, October were horrible. November is going down as one of the best Novembers of all time. Unbelievable. We had about an 8% increase in the S&P 500 in the month of November. That's huge. That's wonderful. At the same time, interest rates came down. Remember, the 10-year Treasury got up over 5%. We saw the 10-year Treasury drop down below 4.5% as I record this. That's fantastic. So we're seeing interest rates starting to come down, which we've been talking about. And we saw the equity markets recover quite a bit, which we've been talking about. So this is a great lesson, and I want you all to catch this. A great lesson to don't panic when the markets sell off. I know it's very uncomfortable to look at when we see these pullbacks. If you miss these big rallies, you're missing a lot. To miss an 8% rally on the S&P 500, and the aggregate bond index was up almost 3 to 4% as well. So we had both bond market and stock markets moving up tandemly in November. Why did that happen? Well, all the reasons we've been talking about. Inflation is slowing down. Consumer spending is slowing down. We see a lot of things that the Fed has been trying to orchestrate with raising interest rates. It's beginning to take hold. As interest rates as inflation comes down, interest rates should come down. So we believe the Fed is done raising rates. Most are saying that probably within the next 6 months, sometime in 2024, we'll begin to see probably the Fed reducing rates. So we feel it's a great time to lock in those bonds, those traditional fixed income bonds, which we've been doing some of that behind the scenes. And we think the equity markets could do pretty good in 2024. We're still off from where we were at the end of 2021. And the valuations got a little ahead of themselves in November, I would say. I expected a recovery, but not that fast. That was pretty incredible. So, but we think 2024 could end up being pretty good. We got a ways to go to get to our all-time highs. We think there's some exciting things that are going on with some of this artificial intelligence that should create some productivity gains and some efficiencies in the marketplace. So we see 2024 probably being a pretty good year. And if interest rates could stabilize right in here and maybe even come down a little bit, it should be good for the bond market as well. So good month in November. Hold the course. We're rebalancing. We're doing the things behind the scenes to make sure you're positioned properly. Your portfolio is looking good. Things are looking good. If there's questions or concerns or there's anything we could do for you, please don't hesitate to give us a call. Again, my very best to you and through the holiday season. Look forward to seeing y'all real soon. Take care and God bless.